Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Federal Reserve Chair Jerome Powell maintains his stance in keeping the key rate on hold as the central bank waits to see how U.S. President Donald Trump's tariffs affect the economy. Carlo Asuncion, chief economist of Union Bank, joins us live for his views. Increased foreign buying of Philippine stocks recorded on July 1st. The day stock transaction taxes were lowered. And tighter regulations in online gambling has been proposed in the Senate. E-wallets may soon be banned from being linked to gambling apps. In the face of unrelenting attacks from U.S. President Trump, Federal Reserve Chair Jerome Powell is sticking with his wait-and-see approach before cutting interest rates. Speaking at the annual conference of the European Central Bank in Portugal, Powell said Fed decisions would be based on incoming data. As the economy remains in solid shape, Powell said monetary policy now depends on how Trump's tariffs would affect inflation. On Monday, the White House showed Trump's handwritten notes that he sent to Powell urging him to lower rates. Citing other central banks, Trump is pushing for rates to be as low as 1%. Adding to the pressure, the president is leaning toward naming a new Fed chair this month or two, even though Powell has until May of next year in his term. For now, Powell is not budging.
I'm very focused on just doing my job. I mean, there are things that the things that matter are using our tools to achieve the goals that Congress has given us: maximum employment, price stability, financial stability. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be.
As the world braces for July 9th, the last day of the tariff reprieve, Trump took aim at Japan for being spoiled and refusing to commit to buying more American rice. Japan's chief cabinet secretary has vowed that the country's agricultural sector would not be sacrificed just to get a deal with the U.S. Tokyo would continue to engage in trade talks with Washington just a week before Trump's self-imposed deadline. Japan is grappling with a doubling in rice prices, partly due to a weather-driven poor-quality harvest in 2023 that caused a shortage last year. Here at home, President Bongbong Marcos has formally launched the implementation of the Capital Markets Efficiency Promotion Act, a landmark reform aimed at lowering transaction costs and encouraging investment. Here's my report. A vote for capital market development. President Bongbong Marcos rings the opening bell at the Philippine Stock Exchange, marking the effectivity of the Capital Markets Efficiency Promotion Act, or CMEPA, a landmark reform that aims to provide Filipinos here and overseas increased access and opportunities in the stock market.
It empowers the small business owner, the young professional, the overseas Filipino worker to start investing their hard-earned money to build a better future.
Starting July 1st this year, the sales tax for selling transaction will decrease from 0.6% to 0.1%. That means if one were to sell 1,000 shares of Ayala Land today, the seller would have to pay only 20 pesos sales tax. That's 100 pesos less sales tax to pay, says Cole Financial. For the government, a lower sales tax means increased participation in the stock market, which in turn will generate more money to fund infrastructure and social safety net programs. Malacanang says from now until 2030, CMEPA is projected to generate over 25 billion pesos in net revenue. Stock market analysts share mixed views.
It will lower the hurdle rate for investors to at least break even.
It's really been something that people have been looking at.
For former Finance Secretary Jesus Estanislao, meaningful capital market development should come along with stronger collaboration.
PSE and the SEC can and should work together. Instead of having very different requirements, making it very difficult for Philippine corporations to list, to become an issuer of bond, or to be a participant in the capital market, makes it very, very difficult. We charge the highest fees in ASEAN for being in the stock market and for issuing bonds. That makes sense. The only thing we need to do is to coordinate.
Marcos has instructed all agencies, including the Securities and Exchange Commission, to ensure everyone feels the benefits of the new law without delay. With us now for more is the Chief Economist of Union Bank Philippines, Carlo Asuncion. So good to see you, Carlo. Welcome to the program.
Yes, thank you for the invite.
Yeah, 7 months into what's been a volatile year for risk appetites because of the global policy uncertainties and most recently the Mideast escalations, just how attractive is the Philippines as an investment destination relative to our ASEAN neighbors?
Well, I think it's holding up. No, it's still an attractive destination for foreign investments if inflation is kept low and the BSP continues its easing stance. We're in a great place for just keeping that excitement for foreign investors to come in and take advantage of opportunities here.
Is it all inflation then? I mean, you've said that if inflation becomes, stays benign, then that is what puts us up against the ASEAN neighbors, gives us a bit of an edge there?
Yeah, I think it's because, in the past, this post-pandemic era, we've been hounded a lot by prices, the increase in prices. Nobody expected that. That's going to come in 2023, just elevated inflation. And now that inflation has seemingly, has gone down, and then I think that's one important thing that investors are looking at, just to make sure that, of course, their investments are protected, and which one they could choose. So I think that's a very important aspect of decision making.
Your inflation estimate for June is at 1.5%. So that puts you smack in the middle of the Bangko Central's forecast range of between 1.1 to 1.9% and towards the upper end, in fact, the median of the Business World poll of 17 analysts that we're seeing there. And you're marked in red. That's where you're at when we talk about the Business World poll. How did you come up with 1.5%?
Yeah, we looked at, of course, data, the food price situation, or the uptick is because of the temporary rebound in fuel prices and certain mild increases in non-rice food items, and that includes utilities as well. So, but despite this uptick that we see, it remains below the BSP's target of 2 to 4%, and we actually see inflation to gradually rise, by 2% this September, and end the year at around 2.5%. And that's still within manageable levels. So we end at an average for 2025 at around 2% for inflation.
But 1.5% doesn't factor the 50 peso wage hike announced 24 hours ago, taking effect on July 17th. Might it make a big difference in your inflation estimates?
Well, it's going to take effect, I think, July, this month. No? So that has to be factored in, but maybe versus 100 to 200 pesos, I think that's 50 pesos is a huge difference from that huge uptick that was originally proposed from Congress. So I think that the 50 pesos that actually includes upticks in wages in certain areas, not entirely the Philippines, and that would be, I think, a manageable impact.
Okay, so given the inflation picture or the lack thereof, how many more rate cuts do you think the Banco Central will make this year?
It's still within, I mean, including the statement of Powell yesterday or overnight. It's still within our expectations that by August the BSP will hold and just be able to determine and see how has been the impact of the rate cuts that they've done in the two rate cuts that they've done this year, and then push through most probably in October with another 25 basis points cut.
But just overnight, he wasn't really ruling out on a rate cut, possibly in the next meeting, which is July 29, 30, because he wanted to watch the data, and in particular, the jobs report this Thursday, and in 2 weeks, the inflation report. So what are the chances that he might make a move?
Well, if he does make a move, it's still within our expectations because we did already two this year. So in terms of interest rate differential, that works well. It still works out well, no? So I think holding in August is still something that's allowable, I would say, that the BSP would still consider and do pull the trigger by October.
So the Banco Central does have that leeway. I mean, whether Powell moves or not this month, the Banco Central will make a move in August.
Well, yeah, we think that they at this point, right, with all of the information, we think that they will consider a hold.
Okay, so in what way will these rate cuts then lift growth here in the Philippines? The government last week cut back on its growth goals to between 5.5 and 6.5 from 6 to 8%.
Yeah, well, we're looking at least the first cut of our nowcast exercise, 4.6% to about 5% for the second quarter. That's still within our expectations for the year because we are expecting a growth of 5.3% for the whole year, 2025. No, so even with the cutback, we've already taken that into account. We're actually in line with other multilaterals, actually even earlier than them, with our expected growth for 2025.
So just going back to my first question then, relative to the ASEAN neighbors, we're still ahead of the pack, you think?
I think so. I mean, even with those challenges externally, we are still better positioned to be like a great destination versus others.
Just as a final point, it's been dollar weakness all throughout these 7 months. Where do you see the peso headed?
We still think that it's going to be at around 55 to 57. No, that's where it's going to be a range for the rest of the year.
All right, there goes the crystal ball. Thank you so much. Cardo Asuncion of Union Bank. Appreciate the insights. You're watching Money Talks. Coming right up, stricter regulations in online gambling may be implemented soon. And will the highly anticipated initial public offering of GCash be moved to next year? And Butch Mailey talks about his book, From Manila to Wall Street, an immigrant's journey with America's first black tycoon. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Senator Win Gatchalian has filed a bill seeking stricter regulations on online gambling. Under the bill, the minimum age for players would be raised from 18 to 21. Age verification would require both valid government ID and biometric data. It also sets a minimum bet of 10,000 pesos and a 5,000 peso minimum wallet top-up. But Gatchalian clarified the measure, which is one of his 10 priority bills at the 20th Congress, does not propose a total ban. This is to avoid driving operators underground. It also bans gambling sponsorships in public events and bars campaign donations from gaming operators. The bill prohibits linking e-wallets like GCash to gambling apps.
Ngayon kasi pwede ka mag-GCash, ililink mo dito eh. Iyon ang nagiging napakadali na kasi. No? So, pinutol namin yung link na yan.
The National Food Authority is eyeing to return to corn procurement next year, focusing on white corn intended for human consumption. The Agriculture Department says the plan may need at least $500 million pesos in funding. Agriculture Secretary Francisco Tiu Laurel Jr. says the goal is to promote corn grits as a rice alternative. The department is also seeking a 1 billion peso budget for palay procurement under the NFA. Meanwhile, U.S. data projects the Philippine corn production to inch up to 8.2 million metric tons next year, driven by good weather and rising feed demand. Government spending on infrastructure slumped in April, mainly because of the election ban on public project disbursements. The Budget Department says spending fell to over 85 billion pesos, down nearly 28% from a year ago. The decline was mainly caused by the COMELEC's 45-day spending ban from March 28th to May 11, along with fewer contractor billings. Lower payments for foreign-assisted rail projects, including the South Commuter Railway and Metro Manila Subway, also contributed to the decline. Still, infrastructure disbursements from January to April rose by 3.6% because of early project implementation and right-of-way payments. Economists expect spending to rebound in the coming months, with 1.5 trillion pesos earmarked for infrastructure this year, or about 5.4% of the country's GDP. Philippine factory activity picked up in June, expanding at its fastest pace in 2 months. That's according to S&P Global. The country's manufacturing PMI rose to 50.7 in June from 50.1 in May, as production rebounded and new orders grew. This marks the third straight month of expansion since the 49.4 reading in March. A PMI above 50 means better business conditions than the month before. S&P Global data showed the Philippines and Thailand were the only Southeast Asian nations to post growth in June, with Thailand leading at 51.7. Both countries also outperformed the ASEAN average PMI of 48.6. However, uncertainty over Trump's tariff policy continues to weigh on export-reliant economies like the Philippines. And in the U.S., the Senate has passed President Trump's tax and spending bill that would slash taxes and reduce social safety net programs, while adding over $3 trillion to the national debt. The legislation passed by a squeaker, 51-50, after Vice President J.D. Vance cast a tie-breaking vote. It will now head back to the House of Representatives, where some of Trump's allies expressed unease over the Senate version's price tag. Among the provisions inside the bill include extension of tax cuts first passed in 2017, no tax on overtime pay and tips, which Trump promised during the 2024 campaign, an excise tax on remittance transfers, stringent requirements for Medicaid and food benefits, and a phase-down of tax credits for clean energy initiatives. The nonpartisan Congressional Budget Office estimates the Senate version would add $3.3 trillion to the U.S. debt load, and 11.8 million Americans would become uninsured.
With this legislation, we're fulfilling the mandate we were entrusted with last November and setting our country and the American people up to be safer, stronger, and more prosperous.
This is not what the country needs. This is not what the American people want. And I must say this, Republicans bent and twisted and pushed the rules and the norms of the Senate to get this bill done, and they have done grave damage to this chamber when they did it. All just so they can pass tax breaks for for billions.
This Tuesday, bringing down most U.S. equities from their record highs. The Nasdaq slid by 0.8%, the S&P 500 inched down by 0.1%, and the Dow was an outlier, climbing by 0.9%. Leading those losses is Tesla, tumbling by over 5%. Tesla shares took a hit as a feud between its CEO Elon Musk and President Trump reignited. Trump threatened to deport Musk, who has been criticizing the president's tax and spending bill, which squeaked through the Senate by a margin of 1 vote. Tesla stocks have significantly declined from a record high of $479 per share before the year started, down to just $300 per share as of yesterday. Meanwhile, 10-year Treasury yields inched up to 4.25%, and gold prices rose to $3,336 per troy ounce. U.S. futures are pointing to slight gains when the markets open later tonight Manila time. The Dow, the S&P, and the Nasdaq all up by about 0.1%. As for Asian markets, mixed bag in the first hours of trading this Wednesday. The Australian stock market there up by nearly 0.4%. Korea's Kospi down over 1.5%, and Japan's Nikkei 225 falling by over 0.6%. Hotel 101 Global has debuted on the Nasdaq, but its shares tumbled by nearly double digits Tuesday, its first trading day. HBNB fell by 9.8% to close at $328 per share. Its IPO was sold at $364 per share and traded by as high as $550 per share, but the price gradually declined throughout the day to as low as $288 per share. Hotel 101's Nasdaq listing was made possible through a merger with JV's Pact Acquisition Corp. With an equity value of $2.3 billion. Hotel 101, a subsidiary of Double Dragon Corp., is the first Filipino-owned firm to be listed on the tech-heavy index, with its CEO Hannah Yulo Lucchini bearing the company's aggressive expansion plans in an interview on this program just before the initial trading.
We're an asset-light prop tech hospitality platform, which we believe will really disrupt the hospitality industry globally with our one-room global hotel concept that promises consistency, comfort, and irresistible values. We believe the moment is now for Hotel 101, for HBNB, because the fundamentals of our business are very strong. We have a bold vision to expand this to 1 million rooms across 100 countries, because we believe we have something that is truly special and truly spectacular.
Let's take a look at our own markets, with the PSEI opening this Wednesday lower by over 0.1%, 6,416. The local bourse advanced yesterday Tuesday by nearly 1%, while the broader all shares index increased by nearly 0.5%. Sectoral indices were in the green, led by holding firms, but both financials and services slipped. Meanwhile, the Philippine peso was open today slightly stronger at 56.27 to the dollar. Peso closed yesterday a tad stronger as well, 56.30 against the greenback. Well, GCash's highly anticipated initial public offering may be moved to next year following the delay of Maynilad's IPO. That's according to Philippine Stock Exchange President and CEO Ramon Monzon. Monzon says both Maynilad and GCash are major listings. Hence, the shift in Maynilad's timeline to October could affect market liquidity for GCash later this year. GCash is still finalizing its IPO filing, while also seeking exemption from the 20% public float rule required by regulators. Despite the slow IPO activity, Monzon says the PSE remains confident in hitting this year's capital raising target of 170 billion pesos. Come to know our next guest as a humanitarian, as president of the Philippine Disaster Resilience Foundation. He's published a book last May in the U.S., From Manila to Wall Street, An Immigrant's Journey with America's First Black Tycoon. Soon after its launch, the book debuted at #1 on Amazon's Kindle business list. Well, with us now for more is the author of the book, Butch Laley. Butch, so good to see you. I see you snickering over there with the word humanitarian, but
Yeah.
to be honest, really, I mean, we've worked a lot with
Yes,
the Hayan
yes,
efforts, so
that's right.
that was my introduction of you, but this whole book just gives me a different view and a full arch of your journey, that before that, you were a PR advisor and an immigrant in the U.S. working with America's first black tycoon. Why was it important to do this book about him and you?
Well, that was my prior life before becoming a humanitarian. And I could not get the character of Reginald Lewis out of my mind. He was such a larger-than-life person. He was the first Black American to launch a billion-dollar bid for a large international corporation. He was the first Black American to run a multi-billion-dollar corporation. He's the first Black American to try and list his company on the New York Stock Exchange. We failed. He's the first Black American to live on Fifth Avenue in New York, because at the time, in the 80s and the 90s, blacks were not allowed to live on Fifth Avenue.
Right, and that was really a turning point because you realized how much of a more difficult journey it is for a Black American to do his work. Much as you're an immigrant, you're Filipino, and you've also worked with other names here. Your book shares anecdotes of your interactions with individuals such as Flying Viking, Jamaican Prime Minister, and in your return to Manila, PDRF co-chair Manny Pangilinan.
Yeah, who's another, he's only in the last chapter, but maybe that's another book.
It is indeed another book, but what lessons do you draw from these individuals?
Well, I worked with the 5 CEOs and 1 Prime Minister from Jamaica, and you know, they all had different management styles. Reginald Lewis, he had this saying, keep going no matter what. So I think the idea is no matter what your obstacles, no matter where you started in life, because he started as in a poor neighborhood in Baltimore, you can make it. We were 2 outsiders chasing the American dream there, and in our own ways we achieved it. And from Manny Pangilinan, I think I've learned the value of hard work. I've never met anyone who works that hard. We have meetings at 1, 2 in the morning on Sundays. And
that's Manila time.
Yes, Manila time.
You were already back here in
right.
Manila. You know, one phrase that stood out when Manny called you to head up PDRF is, at first you viewed it as a chore.
Yeah.
A chore. What exactly changed your mind that, you know, this is the kind of work that makes me happy at the end of the day?
Well, you know, in public relations, part of what you do is CSR. So I viewed it as a CSR thing.
Corporate social responsibility.
Corporate social responsibility. And, but the more I got into it, when I launched a program helping waiters and janitors, security guards at PLDT, and then, of course, Super Typhoon Haiyan, before that on Doi, the smiles of the people, the gratitude of them, and then, you know, I saw a lot of dead bodies in Tacloban, and, you know, people who are starving. And I've seen a lot of disasters. I was in Marawi, 2017, 2018, during the fighting and after the fighting. So I got a sense of fulfillment, which I did not get from, to be honest, from my financial career. I got a different sense of fulfillment there, but this was more personal.
Right, and that's where I met you, when
That's
the
right.
fulfillment became more personal. So just turning to the personal side, do you ever get to talk to your former partner, Pam?
Well, it depends. You know, we're sort of friends now, but you know, it took a while. I mean, I think that's one of the lessons I learned was that you know, when you're young, career's very important, and it's the only thing that matters. But I think there's a price to be paid, and this is a cautionary tale for young people today that you've got to pay attention to your families because you don't want to lose that along the way, and I have a lot of regrets about it.
But a tale of redemption with Marco. You've been in touch with Marco. And,
yes.
And he's been the only son
yes.
Who's really kept you together.
Yeah, I mean, he is the main thing in my life now. He's out in Los Angeles. And at the end of the book, I say I wrote it so that he'd understand how we lived, what it was all about, and perhaps why we're no longer a family today.
Well, you got this book, and this book matters to your family and to the rest of the world who reads it. Thank you so much for sharing your life journey. My gosh, more than just a humanitarian.
Yeah, July 20th,
man.
fully booked, 3 p.m.
Got that. All right, thank you. Butch Mayley, author and chair of the Philippine Disaster Resilience Foundation. Just before we go, we told you we'd update you on Filipina tennis ace Alex Ayala. She fell short in her Wimbledon debut, bowing to defending champion Barbara Krejcikova. Well, Ayala started strong, taking the first set with sharp returns and capitalizing on Krejcikova's shaky service game. And that momentum shifted in set 2 as the Czech world number 16 stepped up her aggression, attacking Ayala's forehand and racing to a 5-0 lead. Though the Filipina showed flashes of brilliance, her opponent's experience proved too much. Ayala now shifts to women's doubles with a German partner. The game carries on, and That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.